I believe that there's a startup revolution going on in our society right now. And I think everyone in this room is part of it. And you're not just part of it, but you're the early driver of something that I think fundamentally is transforming the way our entire society works and thinks about work, innovates and thinks about innovation, and thinks about what matters over a long arc. You have the first of a series of books that I'm doing called Startup Communities. 100 of you have it. Hopefully the rest of you will be inspired to make my publisher Wiley happy by buying a copy. And it's the first of a series of books that are coming out that are part of this construct of startup revolution. The book coming out after Startup Communities that should be out by January is a book called Startup Life, Surviving and Thriving a Relationship with an Entrepreneur. And it's being written by me and my wife, Amy Batchelor. And we're going to have like a very small essay afterwards called Surviving and Thriving in Writing a Book with Your Spouse. But the startup revolution encompasses a whole bunch of things. And at the very essence of it, from my perspective, is this notion that you can create a startup community in any city in the world. And I believe this for a long time. I grew up in Dallas. I lived in Boston for 12 years, where I went to school and started my first company. And I moved to Boulder in 1995, knowing one person, and he moved away about 3 months later. And when I moved to Boulder, I got to Boulder because Amy and I were not from Boston. I was from, as I said, Dallas. She was from Alaska. We both went to school there, met, married, had a business, sold a business. And when I sold my business at 28, I told Amy, by the time I'm 30, we'll be out of here. I don't know where we'll go, but we'll go somewhere else, because this really isn't home for us. And 2 months before I turned 30, she told me that she was moving to Boulder, and I was welcome to come with her if I wanted to. And that's how we got to Boulder. It was that scientific. I've been on a journey now for 17 years in Boulder, in the startup community there, which is an amazing and incredible startup community that's been developed over 17 years, but existed before I showed up. And in addition, I've invested in a lot of different companies all across the country. I co-founded TechStars with David Cohen in 2006, and I've had lots of experiences deep in startup community dynamics in Boston, in New York, in Seattle, in San Antonio, where we have a TechStars program called TechStars Cloud, as well as, of course, other cities that we have investments in, like Portland or Austin or Chicago. So big cities and some not so big cities. For perspective, Boulder's 100,000 people, just as you start to think about sort of how this unfolds. So what I want to talk to you about today is at the heart of what I think is driving this idea that you can have a startup community in any city. And I want to start by trying something new that I haven't tried before. Often I'll go through this construct of a Boulder thesis, which is when you write a book, at some point the publisher says, well, you need a framework for your thoughts. So any business book that you've ever written, or any nonfiction book that you've ever written, probably has some kind of framework in it, or has a framework. And so I said to the publisher, cool, no problem. I created a framework, and I called it The Framework. And my publisher, Wiley, sent me, the guy I work with at Wiley, sent me a nice email saying, it needs to be like more spicy than The Framework. And I said, how about the really great, awesome, amazing, incredible framework? And he said, no, that doesn't work. And so I called it the Boulder thesis, and he said it worked, and then I moved on. I'm like, okay, good, I've got a name for my framework. So normally I would start a talk like this by going through the 4 principles of the Boulder thesis and explaining them. However, Lisa and her colleagues at the Kauffman Foundation created an amazing short video in their sketchbook series. And in fact, my favorite sketchbook series up to this point, other than the one that was just done, was one that Paul Kudrowski did about raising money. If you've never seen it, it's completely worth spending time with. But I want to try to see if the sketchbook is a good start to frame out the Boulder thesis, because I think I'm curious about your reaction. So I'm doing a little bit of A/B testing, which would be me talking for the next 10 minutes about the Boulder thesis, or you watching this video. Okay? So can we roll the video and hear about the Boulder thesis?
I'm Brad Feld, a partner at Foundry Group, the venture capital firm in Boulder, Colorado. If you go back to the industrial era, everything ran in a hierarchy. Businesses had a boss, and people worked for the boss, and you worked your way up the hierarchy. As we evolved from industrial society to information society, we started to see some changes. In entrepreneurship, especially at the very early stages, there is no hierarchy. But if the hierarchy tries to drive the startup community, it essentially stifles it. The hierarchy is really collapsing, and many, many, many more aspects of what we do are behaving as a network. This was the starting point for thinking about how startup communities evolve. What I came to was a thesis that I call the Boulder thesis that has 4 parts, and those 4 parts are essential for a sustainable, vibrant startup community anywhere in the world. First, it has to be led by entrepreneurs. I define the universe into 2 categories of people: leaders and feeders. The leaders in this context are entrepreneurs, and the feeders are everyone else that participates in the startup community: university, government, venture capital investors, angel investors, service providers, lawyers, accountants, etc. The feeders have very important roles. They become part of the fabric of the startup community, but the feeders can't be leaders. The leaders have to be entrepreneurs. Second is entrepreneurs have to take a very long-term view. It's a generational view, 20+ years. It's people who are making a long-term commitment to invest heavily in the development of their startup community. The right cliche is that you're running a marathon, not a sprint. In a startup community, over a long period of time, you're going to have some extraordinary successes, as well as some really huge failures. When somebody's incredibly successful, that person is still part of that startup community. When somebody's a failure, have a wake, move on, reincorporate them into other things. You're essentially saying it's okay. It's just part of the process. Third is you have to have a philosophy of inclusiveness. It's not just other entrepreneurs, but anybody who's interested in being part of this startup ecosystem. If everybody contributes energy into the startup community, it'll get bigger and grow faster and be more successful and be more fun. And the fourth is you have to have activities and events that engage the entire entrepreneurial stack. Those activities and events need to be more substantive than an award dinner or a cocktail party. They have to be things like an accelerator program like TechStars that engages the entire community in helping a set of startups get going. Or something like Startup Weekend that's essentially a simulation of entrepreneurship. So those 4 pieces are essential for the long-term health of a startup community. It's just this sort of network chaos of entrepreneurs doing what entrepreneurs do, which is create things. That force of the entrepreneurs to build something bigger than just themselves and their company is so incredibly powerful.
So you've gotten a few minutes of listening to me so far, so I'm going to do my A/B test now. Close your eyes because I don't want to bias the discussion. That's how an A/B test works. You can't know the answer. Raise your hand if you think that it would have been more effective for me to talk for 10 minutes than watch that video for 5. And raise your hand if you thought that that video was awesome and I should always play it. Excellent. Thank you. Big win on the video, so good A/B test. And you know, it's nice, it's useful to know because one of the challenges of writing a book and doing, you know, having a mission that you're on in terms of something is you say the same thing over and over again. And any of you who have pitched your company over and over again, or tried to sell something over and over again, or had some story or perspective that you're trying to share, at some point you realize that you're completely bored of listening to yourself talk about the same thing. And so it's actually nice, I don't do slides when I give talks like this, so it's actually nice to have that framing start differently. So thank you for sharing that experiment. I think I'm going to continue to do that. So let me repeat the 4 things quickly and then drill down into a couple of very specifics that I think are powerful in the context of startup community, and especially startup community in any city that exists. So first is this notion that the leaders have to be entrepreneurs. And in the book, I take that apart and talk about all the different feeders and the roles of the feeders and how feeders can be successful and impactful on the startup community. And individual members of feeder organizations can be leadership roles in your startup community. They can play leadership roles. But in the absence of a critical mass of entrepreneurs who commit to be leaders, on the second point, for the long term, 20+ years, in the absence of a critical mass of those, you will not have a successful startup community. And the critical mass is not every entrepreneur. In fact, it's not that many. It could be 5 or 10. When I go back to Boulder, and I go back in time to Boulder and think about 1995 in Boulder, and I go through in the book some of the history of how Boulder unfolded, but when I first moved there and I started finding other entrepreneurs, there were maybe 10 or so entrepreneurs who were really willing to be leaders of this nascent startup community. Now, I didn't have this construct or this framework or this way of thinking about it, so it happened organically. But this group of us, which included me, were excited about being connected to each other and about connecting more entrepreneurs to each other and starting to build something in Boulder versus what existed at the time was, you know, a number of entrepreneurial activities, but a very diffuse construct, a very diffuse sense of community. A lot of biases. When I moved to Boulder, everybody said, oh, you can't get a company funded here, you have to go to the Bay Area. And when I moved to Boulder, people said, why the fuck are you moving to Boulder? You're in Boston. Like, Boston's like really good for startups. Why Boulder? And, you know, I told them that Amy made me, and that was the end of that. Or she didn't make me. She gave me the option, I should say. Be fair about it. Not the option for her not to go, but the option for me to come with her or not. Another thing that I heard was, yeah, Boulder's got a lot of techies, but it's got no management. It's got no salespeople. That's an easily solvable problem if you have a 20-year view. Boulder has no venture capital. You want to know something? Boulder still has very little venture capital. Boulder's too small. It's 100,000 people. So what? Turn that into an advantage. So there are all these things that these entrepreneurs recognized were easily overcomable from a leadership perspective. Today, if you look at the Boulder startup community, there's 75, 100 entrepreneurs who play leadership roles on a continual basis. So the critical mass doesn't have to be 100 on day one. It can be 5 on day one. But those 5 have to commit to number 2, this 20-year journey. And the reason I say it's a 20-year journey is I think of it as a generational phenomenon. And in a more sophisticated conversation, after we've had the conversation the first time and somebody starts challenging me, why 20 years? Why not 15 years? Why not 27 years? My response is, actually, it's 20 years from today. And in a year, it's still 20 years. And in 5 years, it's still 20 years. So the Boulder dynamic today is 20 years from now. And so the conversation about how we doing happens in 2032, not in 2013. And so you have to have this very forward-looking view in terms of time. There's a lot of reasons for that. The easiest one to get your mind around is the notion of cycles of the feeders. So what's the life cycle? What's the cycle that government works on? Anybody want to toss a number out? No, 4 years. Anybody else? 2 years. Somebody said 20. I disagree. 12? No. 2 and 4 are good numbers, but it's actually 1 and 3 because of this thing called an election. And you lose 6 months before and 6 months after an election almost all the time. And so really the time cycle of government initiatives during an election cycle is only a year or a couple of years to get anything done. Let's try university. What are the 2 magic numbers in a university? Come on, just guess. 4, nope. 25, maybe, I don't know. I never thought of that one before. Smaller. 1, there's another magic number. Anybody in here ever been an associate professor or know an associate professor? What number are they obsessed with? Tenure. And how long does it take to get tenure? 7. I heard 7. Right? 1 year and 7 years. That's how universities work. And the 7 year is all about a professor trying to get a promotion. And the 1 year is all about the calendar year or the fiscal year of the university program. Again, nothing wrong with that, but it's not 20 years. Macroeconomy goes up and down. We have cycles. Those cycles tend not to be 20-year cycles. Our economists tell us that our cycles are much shorter, and then they look back and decide to change the length of time of the cycles in retrospect because they weren't quite right with whatever data that they had that's still not quite right. And oh, by the way, it's already happened, so it's totally irrelevant because we've now moved on. That's not how entrepreneurs think. And so the entrepreneurs have to take this long-term view. Hierarchies don't. Companies, this is the easy one. How do companies think? Big companies, quarterly and annually, right? So by looking at that time cycle, almost by definition, if you believe and you accept that it's something that builds over time, the only people that can really lead it for that period of time are the entrepreneurs who have lots of uncertainty in the time cycle of their company, but can be committed to the community for a long period of time. The third point is this notion of inclusiveness. Anybody here ever been to Boulder? Put your hands down. Anybody here went to Boulder and couldn't figure out your way around? One? Good. Will you send me an email, brad@feld.com, the next time you come to Boulder, and I'll help? So most people raise their hands. It's very easy to show up and get woven into the fabric and meet people. And in fact, the mechanism for that, and I'm going to come to this in a second, is a completely network-driven mechanism. There's no vice president of membership and no vice president of education of the Boulder startup community. It's just this messy, sloppy thing where people make connections to other people. And you can email brad@feld.com and say, I was at the Thinc Iowa thing and you said you'd help me. I'm coming to Boulder next week. Can you connect me up with some people? I will say, what kind of people? You will give me an answer, and I will connect you with those people. And some of them will say, I'm not around, I can't help, but here's 3 more people like that that I know that I could connect you up with. And all of a sudden, you're woven into it. That notion of inclusiveness has to happen across the entire startup community, across leaders and feeders, about anybody who wants to be involved at any level. And sure, every now and then you're going to get some bad actors. Every now and then you're going to get somebody who doesn't fit for some reason. That's okay. If you have this organism that has a philosophy of inclusiveness, one of 2 things happens. Either that person goes away. It's kind of the bully that you ignore. If you ignore the bully or you ignore the troll, they eventually get bored and they go find somebody else to bully or be a troll about. If you engage, they continue to engage with them. So the organization, or the organism, kind of deals with it. The other, which is the really fun thing, is that the bad actors sometimes say, oops, I screwed up, I'm sorry, I got it. And they do change their behavior because they want to be part of something. And so you make it easy for people to continue to engage and be inclusive. The fourth is this notion of having activities and events that engage the entire entrepreneurial stack, from people who want to be entrepreneurs, to people who are first-time entrepreneurs, to people who have started an entrepreneurial company that didn't work, that are now working somewhere else, but still connected into the startup community and want to do something next, to people who are multi-time entrepreneurs, to people who are the service providers, the venture capitalists, lawyers, accountants, all the people around it, people in government, people in university. Having things that engage people in actually doing stuff is so much more powerful than yet another cocktail party. How many people here have been to yet another cocktail party? They're okay. When I was 40, there was a party for me where I received a Lifetime Achievement Award at 40. It's fucked up, right? Now, it was my friends, so that was nice. I was very generous. I was honored. And I got up, there's a beautiful video, and everybody said nice things, and it was all good. I got up at the end of it, and I said, I'm 40. How about we call this the Half-Life Achievement Award? And a few people tittered in the back because I got a bunch of friends that are nerds. I thought to myself, shit, half-life means this, right? So my best moment is in front of me. Or behind me. My best moment, it's never going to get better. Every day it's going to be half as good as the day before. And so I thought to myself, I said, how about Midlife Achievement Award? And Amy was in the corner, and she says, no! Because she's the same age as me, and she has no willingness to accept that that was happening. But the point was, it was nice, but it didn't really do anything other than be a celebration. Celebrations are good. As humans, we like celebrations, but that's not the sufficient condition. The sufficient condition is to get together and do stuff. How many people here have been to a startup weekend? I know there's been some around here. How many people here hated the experience? And if you hated it, raise your hand. How many people loved the experience, thought it was awesome? How many people got one amazing thing out of it? So why are half the people in this room, they're almost at 100% yes. The other half of the people in the room, go to a startup weekend if you're interested in entrepreneurship. It's an incredible simulation of entrepreneurship. For 54 hours, you get to spend time with other people who are into starting up a company. And whether you're an aspiring entrepreneur, a first-time entrepreneur, experienced entrepreneur, the energy around it is incredible. The linkage to these other people where you're actually under stress to do something and create something creates bonds and relationships that are unique. And oh, by the way, if you're an experienced entrepreneur or an entrepreneur looking for a partner, it's a great place to recruit people. So there's a whole series of things like that. In Boulder, on Tuesday mornings every other week, there's something at a coffee shop called Open Coffee Club that we've now been doing for 5 or 6 years. It's capped at 70 people because the largest coffee shop in town can only hold 70 people. And about 20 people show up every 2 weeks, the same 20, and about 50 people are random different people. And if I go once every 6 months, I'm welcome as though I came every other week. Again, this notion of inclusiveness. And it's just this way for people to get together and talk about what they're going on and share what's happening and deal with specific issues. Anybody here ever been to the Boulder New Tech Meetup on the first Tuesday of the month? A couple people. Was it interesting?
Humbling and fantastic.
It was humbling and fantastic. 100,000 people in this town. We have 500 people show up to this thing the first Tuesday every month. And it doesn't go on for 2 hours. It goes on for about 6 hours. Because people show up an hour early, and then everybody goes and does after parties in smaller groups afterwards. And it's just 200 people of the 500 are the same every month, but it's always new people. And it's inclusive. And somebody shows up in Boulder and says they want to get involved in the startup community. I say, go to the New Tech Meetup. Not once, not twice. The first month, you're not going to know anybody. It's awkward. You sort of see what's going on. You're not really sure what's happening. The second month, you recognize a few people, and you sort of talk to people. And if you're an extrovert, you might talk to a couple of people. The third month, you actually have a little gang, and your little gang goes out to dinner afterwards. And the fourth month, you think, it's time for me to present. And the fifth month, you're part of the fabric. So within 6 months, you're part of the fabric of what's going on versus having to apply for a membership and get your membership card and show up and do your things. Now, these activities and events, and I cover about 20 of them in the book, so these are just a few examples. Any one of them by itself seems trivial. The thing that's so powerful is when you have them continually. You have them happening, something happening daily or almost every day, with recurring patterns, weekly, monthly, quarterly. TechStars happens once a year for 90 days. It's like inverse summer vacation, right? You know it's going to happen. And for that 90 days, the startup community focuses on a thing. Oh, it's lots of other things going on too. Let's go to point number 3. It has to be inclusive of anyone that wants to engage. Number 2, people have to take a very long-term view. The New Tech Meetup, the first time was 12 people. They've had 110 or 120 of them now. That's a lot of New Tech Meetups. And number 1, the entrepreneurs have to be the leaders. And the key thing is, these entrepreneurs are not appointed leaders. They're not elected leaders. They just lead. There is no president of the Boulder startup community. When people say person X is the one that made it happen, whether that person is someone else or me, the answer is no, no, no. There's a whole bunch of leaders. And oh, by the way, the leaders don't hold on to the thing in a proprietary way like you do in a hierarchy. The leaders are perfectly happy to start something and let it go. You'll see a bunch of examples in the book. Andrew Hyde started a number of things. And he did it for a year or two, and then somebody else that was part of the leadership of the thing, he'd say, here. Because he wanted to go do another thing. And I'm the same way. I've created a number of things, and then somebody else took it over. And I don't need to be the chairman emeritus of the thing. Right? My value, the emotional intrinsic value I have is being part of this inter-network thing. So I'll make a couple more points before we do Q&A. I want to make sure there's enough time for some Q&A at the end. One of the really important points, and it's in the video, but I want to emphasize this because I've been talking about it, is this notion of networks versus hierarchies. If you go back to the shift from an agricultural society to an industrial society that happened, turn of the century, 1900s, and really started its acceleration in the 1920s, 1930s, 1940s. Industrial society was built around the notion of a hierarchy for efficiency, for leverage. lot of people doing specific tasks. Those tasks roll up, those tasks roll up, roll up, roll up to the boss at the top, and that's a way you communicate through a hierarchy and you can coordinate lots of people. And we have lots of examples of structures today in our society that are hierarchies, some that are functional and some that are not. The most obvious hierarchies that we live with every day include government, military, large companies. Universities are mostly a hierarchy with some weird permutations because of the power dynamics between the hierarchy and the academic piece of university. Most big businesses. And there's plenty of other examples. Now think about entrepreneurship and startups. Startups are the inverse of that. They're networks. They're chaos. Sure, there's usually a CEO of a startup, but even a startup that's 100 or 200 and 300, 500,000 people often has very minimal hierarchy. Has some, but the hierarchy is not constraining. The person at the bottom of the hierarchy is allowed to send an email to the CEO, and the CEO will respond. That doesn't happen in a lot of big companies. In fact, I heard a story about how, unless you're a certain level at a local insurance company, you're not allowed to have windows. And if you have windows, they put things up in front of your windows so that you can't have windows. It's just a different way of thinking. And this is part of the challenge and the struggle, is that entrepreneurs don't think in a hierarchy. You want to talk to me? brad@feld.com, just email me. I'll try to respond. Help me out because I get a lot of emails every day. Give me some context, get to the point, send me a question, give me something to do to be helpful to you, versus just say, hi, let me tell you my story, and I read through your story and I don't know what you want, and my response is, cool, good story, what do you want? But you can reach out to me to ask me for anything you want. If I can't help you, I'll say no. But you don't have to ask permission to interact with anybody else in this room. You don't have to ask permission to start something new in a startup community. You don't have to ask permission to start your company. So this notion of a network, I think, in 2008 was a climactic point for the hierarchy and the beginning of the network in our society. We've been talking about networks for a long time. We're conditioned to them with the computer because of Facebook and Twitter and LinkedIn and all this stuff and social networking. Human beings, by definition, like to be connected in a network. That's how most cities work. Jeremy talked about it in terms of his community and how he thinks about the community out here. Think about it in terms of startups. What if the startup network was not inhibited by any hierarchy? And oh, by the way, it's not. That's up to us. The other concept I want to focus on quickly before we shift to Q&A is this idea of give before you get. And the meme that's gone around in the last couple of years is pay it forward, and either phrase is fine. They mean the same thing in my world. Give before you get is deeply woven into the ethos of the Boulder startup community. The idea is very, very simple, and I'll give it to you in a metaphor. There are two types of people in the world of startups and entrepreneurship. There are mentors and advisors, in terms of helpers to entrepreneurs, and they could be entrepreneurs themselves. Mentors and advisors. A mentor says, very simply, what's your name? John, how can I be helpful to you? An advisor says, hey, John, I'd be happy to be helpful for you if you pay me $1,000 a month, or give me 1% of your company. So the mentor has no expectation of what's going to come back to him or her. He's just willing to help, put energy into the system. The advisor has a precondition in advance. There's a role for advisors. I'm not arguing that they shouldn't exist at all, but the world needs a lot more mentors. The world of startup communities need a lot more mentors. And you don't have to qualify to be a mentor. You don't have to pass a test. You don't have to get a mentor license. You don't have to ask permission. All you have to do is say, how can I be helpful? The most powerful mentor relationships are between peers. Two people that can help each other without a clear expectation when they start helping each other of where it's going to go. I've been operating this way for a very long time, and I will tell you the amount that I've gotten back, both financially and emotionally, far outweighs the amount that I put in, unambiguously over the last 20-something years. In Boulder, it's pervasive. And we've worked really hard, we being a bunch of people, not just the leaders, have worked really hard to make that the cultural norm within the startup community. And I think that that's something that's a natural behavioral pattern of a lot of entrepreneurs and a lot of people all over the country. It's not limited to a particular geography, but you just have to embrace it as your startup community. I'll end on this idea that I think you can have a startup community anywhere. An awesome night last night with Startup Iowa in the, what's the name of the building we're in? Startup City, with 30 people, just an evening together, talking about entrepreneurship, talking about startup community, talking about what was on their mind. And one of the things that sort of came out of it at the end was this notion of don't hold yourself back with limiting behavior. Don't hold yourself back with words. The words matter. I hear a lot of people talk about different stuff around the Midwest. You know, we're risk averse, we're conservative. Turn them into a positive rather than a negative. Anytime you see somebody in the startup community apologizing for what you perceive to be, stop. Turn it into a positive and figure out how it's an asset that you can use to build your startup community rather than something holding you back. Let's do some questions.
Fantastic.
It's pretty awesome to get 2 standing ovations at the beginning and the end, so I like that. I've been watching that all morning and thinking how awesome that would be, and it actually feels really awesome, so thank you.
That's how we roll in Thinc, Iowa. You may have one more coming when you exit the stage. Hey, if you guys have questions, we have 2 microphones, one right here, one right here. My question for you, I want to start with this, Brad. You said entrepreneurs don't think in a hierarchy. But to be clear, you're not confusing that with consensus building and decision making, right? At the end of the day, someone still has to make that clear decision.
Absolutely. And this is the awesome thing about startups, right? Startups actually make decisions much better than most hierarchical models because there's not this long layering up and down of building an argument or a consensus to ultimately have a boss make a decision. It's a very flat conversation, but you still have to make a decision in charge, but entrepreneurs are conditioned to do that. So I think it's an important point. Don't say, well, there's no hierarchy, therefore it must be totally flat, and it must be completely a network, and there's nobody that's doing anything that's in charge. It all just sort of happens, and it's a wonderful hippiedom from 1960s, and let's all drop acid. Drop acid if you want. That's not what I'm talking about. A leader makes a decision and just goes. And the key is that that leader doesn't have to ask permission in this construct.
Hey, Brad. You talked a lot about communities that exist in a geography, in a specific area. And I talked to you a little bit about this earlier, but what can we do and what should we do for communities that may better exist online, electronically, to a certain extent, where there might be a very small, very, very small niche, and it may be best to connect online for whatever reasons?
So I believe that the powerful thing about the world we're living in right now is we are in this merge point between humans and machines. I actually believe the machines have already taken over, and they're just waiting very patiently for us. They have absolutely no incentive to scare us off because we're doing all the work. We're entering all the data into them. They don't have to actually figure out how to get the data. So whether you believe that or not, I believe that. And I'm investing in a lot of companies writing software, so at least I have a shot when they take over because... But culturally, think about, you're 19, right, you said?
Yeah.
Think about a 5-year-old. How many people here have a 5-year-old? You think that 5-year-old is not going to be 100% comfortable with the merge between machine and human? Just the rate of innovative change, the fact that we have a supercomputer in our pocket and the supercomputer is always connected. And oh, by the way, is this acceptable? That's ridiculous. It's awesome and ridiculous. So we're on this incredible path. And I think that it's really interesting. Human beings still like to be together. They like to smell each other. They like to spit on each other. They like to touch each other. They like to smell each other, right? There's power about being together. But there's incredible power about being connected and not being together. when I moved to Boulder, people said, you can never be a successful venture capitalist from Boulder because you have to be close to the companies that you make seed investments in. And I had already been making seed investments from Boston all over the country in the mid-90s, so I just rejected the idea. And I just had to get on planes and work a little harder and pick up the phone and call people. And today, really, you think that geography bounds you in some way? Sure, it inhibits things. It's easier sometimes to be in the middle of everything, but there's also a cost associated with being in the middle of everything in a place you don't want to be. And we talk about this in Startup Life, the next book, which you can pre-order on Amazon, by the way, if you like this talk. Just go to startuprev.com/lifebook. I believe very, very deeply you should choose where you want to live and then build your life around it. And that's what I've done. It's very possible. I don't believe you should go somewhere because that's where you think the opportunity is, unless you want to live there. It's totally fine to go somewhere because you want to be there. That's why you take a 20-year view. That's why you lead. That's why you do something that's powerful for your community. And I think that that is the mix of the two, because especially if you're not in the middle of something, you have to work a little harder at making those connections.
Thank you so much.
Sure. Go, I don't know what the cue. Go ahead.
You was first.
Go ahead.
My question is, how important is media for startup communities?
What
for
kind
instance,
of media?
like Silicon Prairie News, bringing attention and highlighting events, bringing community together. How important of a player is that?
Okay, I got it. So I think that there's two separate things that are important. Media, like Silicon Prairie News, is very useful at providing a permanent record and a context for what's happening in a local geography. However, I was in Boise a week ago, and I was talking to 200 people at a meetup that happened impromptu at a company called Ballyhoo, which is a fast-growing company. And I asked the people in the room, how many of you have a Twitter account? I'll do that here. How many people don't have a Twitter account? About the same number, a couple people. And I said, it's totally fine, don't worry, it's all right, don't worry, don't feel insecure. And the person that didn't have a Twitter account was nervous, and I said, no, 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 really, it's okay. It's okay. My mom just got one recently. My dad's had one, but he still doesn't really know how to use it. He still tweets out, love you. You got a couple hundred followers, right? If you want to have some fun, tweet something to @sfeld and see, because he sees those, and he'll tweet back something and be like, I love you. Because he doesn't quite get it. I said to the room, why? They said, oh, everybody knows about Boulder, blah, blah, blah. Like, what's going on? Why don't we know about, what should we do? I'm just like, well, number one, follow everybody. Because if you follow everybody in your startup community, you have ambient information about everything that's going on in the startup community. Just follow them. If you find them tedious, uninteresting, unfollow them. But just follow them. Be promiscuous. Let there be more traffic. Talk about what you're doing. Okay? It's good for Think Iowa to do hashtag Think Iowa. It's good for my ego to the extent that I care, and for those of you that know me know I don't, that you would hashtag @BFeld. But the more important thing is that this community is making noise about what's going on in this community. And it's not that you just do this for this event, that you do this continually. And really the power of all that stuff is that two things. One is that when somebody's here, it's clear what they can connect into. And the other is that you start to have this view that there's some activity going on. And you can't really manufacture that, right? Chicago did is a totally fascinating example of this because of 1871. 4 years ago, 5 years ago, people were like, Chicago, yeah, whatever. Okay, yeah, they got that Groupon thing. That was like 3 years ago. I got the Groupon thing. Yeah, whatever. And now, I mean, you go to Chicago, if, all you have to do is just go to 1871 and hang out for the day. Have all your meetings there. Where are you? 1871. What's going on? Can you meet at 1871? I'm at 1871 all day. Just swing by when you have a few minutes. Like, I was calling it 1851 the first couple of times I heard it because I didn't know that 1871 was the right year. And then people, it's 1871, you moron. I'm like, okay, got it, 1871. Right? It's just make noise about your own community. Don't depend on somebody else to do it. Those are useful things because they create a longer form in the same way, for example, that a book would be an even longer form record but just make noise and start now. Don't be bashful about it. Talk about what's important to you, what's interesting to you, and it can be Facebook, it can be Twitter, it can be LinkedIn, whatever your favorite thing is, but make noise.
Okay, so you began your talk talking about the 20-year goal of ecosystems, yet you founded TechStars, which is an accelerator. Can you talk about the differences there of what you're trying to do, and then why one is longer term and the other is
Sure. TechStars, and you'll see it in the book, there's a chapter called Activities and Events. TechStars is simply an activity. So we started TechStars. The way TechStars happened, for those that don't know the origin point, is David Cohen was an entrepreneur who I didn't know. He knew of me, I didn't know who he was. I have random days once a month where I spend the day meeting with anybody who wants to meet with me. I do 15-minute meetings. I have a clock on my desk, a timer on my desk. Now I use my iPad. I say, go, you have 15 minutes of my life starting now. And when it buzzes, I say, it's time to go. And then sometimes people say, well, what do you want to talk about? I'm like, it's your meeting. You've got 14 minutes and 45 seconds left. Get on with it. Whatever you want. And there's been cycles where I haven't done them. I haven't done that many of them this year because I've been so deep in some other stuff. But this is a way for me to just connect to a bunch of people who are constantly wanting to connect with me. David comes in on a random day. It took him 3 months to get on the schedule because it fills up fast. He sits down. He pushes across the table after I start the timer. You know those brochures when you make them on an 8 by 11 inch piece of paper and fold them so it's 3 folds? And he printed it on a color laser printer, so he must have done it at whatever Kinko's or Kinko's equivalent was. And it was kind of like this shitty description of this thing that he then started talking. You know, I scanned it. I said, well, tell me what this was. He started describing to me that he was making angel investments. He'd been a successful entrepreneur, making some angel investments, hated the dynamic. And what he really wanted to do was get involved with a lot more entrepreneurs and involved with a lot more mentors, other successful entrepreneurs, to help those entrepreneurs versus what he was seeing with the angel scene in Boulder, which was fragmented, not very effective, not many transactions happening. And this idea that it was somehow okay to be an angel investor where your job was to torture entrepreneurs who wanted money and then not give them money. And then if you gave them money, the entrepreneurs were so miserable with being tortured that they didn't really want anything to do with the angels in a mentorship dynamic. He said, I want to change all that, and he described TechStars. And 5 minutes into the conversation, I said, I'm in. He said, it cost us $230,000 to do the first program. He said, I'm in for 80. I need to raise the rest. I need to raise 150. I said, I'm in for 50, and I'll help you raise the other 100. He says, well, I think my partner, David Brown, would probably do 50. And I said, no problem. I'll make a phone call. I called my friend Jared Polis, who on the spot committed 50, and we were done. Now, you say, well, that's nice. You have done some money. Well, actually, it was that I'm an angel investor. I make lots of investments, and I've wasted way more than $50,000 on much stupider things. So that's how it started. I mean, it was that simple in terms of the initiative he took, and that's turned into this phenomena that is TechStars that has, very early on, we decided we're going to open source the way we do this. We're going to just tell anybody that wants to start an accelerator that's a mentor-driven accelerator what we're doing, and we're going to help as many as we can. And part of the reason you see this phenomena of accelerators everywhere is because we enabled many of them with this give before you get mentality, and that's continued to expand and accelerate. TechStars by itself in a startup community is by no means sufficient. It's just a thing. And I talk about in the book the difference between accelerators and incubators, and there's a very significant difference. But you need to look at an accelerator no different than a new tech meetup, no different than an open coffee club, no different than startup weekends happening, no different than Excite, no different than TEDx, list goes on. It's just another thing in that fourth category that engages everybody in the startup community from top to bottom in the entrepreneurial stack. Hope that answers it. Thanks for having me. You got my email address, brad@feld.com, if I can be helpful. And it was awesome. I had a great time here.
Give it up for Brad.